today on Ag News Daily.
Go back to 1990, we exported about 80% of the value of corn exports was in bulk, very small percent in other processed goods.
Yep.
Today, it's about 60% goes in bulk, 40% and a growing percent is those high-value things. It's the syrups, it's the ethanols, it's the oils.
Welcome back to the weekly edition of the Ag News Daily Show. Of course, joined here by Michelle Stangler as Tanner is out on vacation this week after a very busy Commodity Classic week last week, Michelle.
Yeah, it's crazy how we're in the middle of March, spring break season. And yeah, if you're tuning in via spring break season, we're glad that you're here.
Absolutely. We've got a lot of great weather and news to cover here later in the show. But Michelle, before we get to that, what was your impression of Commodity Classic? Was this the first time you've attended?
I've attended before when it was in Orlando, Florida. And this year, I think the theme was tariffs and a lot of news elements of what was happening. But I thought what was really cool was there's different ways to engage with different booths. And so I thought the booth of pickleball and showing how soybeans was used in that area, that was pretty cool.
It was. There were a lot of meat booths. We got to talk to a lot of meat folks, and we'll be airing those conversations here over the next few weeks. But to kick us off for news for today, let's talk weather. We've seen some unseasonably warm weather this week in the Midwest and Upper Plains, and it's going to continue to maybe be warm here in a few states. While drought conditions persist across much of the region, we are going to see a powerful storm system that will set to be moved in today through Saturday. I know we're going to get some thunderstorms here in central Iowa and maybe some heavy snow in the northwest that could create some blizzard conditions. Looking ahead, additional systems are expected next week and could bring another band of heavy snow. Eric Snodgrass, as we talked weather last week on the show, not to tease too much, but we may be seeing an April 4th blizzard. So will we see that come to fruition or not? That could help drought-stricken areas, though, Michelle. So I know may not be an ideal time of year, but we could certainly use the moisture. Meanwhile, unfortunately, a high wildfire threat is developing across western, central, and northern Texas, extending into parts of New Mexico and Oklahoma. Strong winds up to 70 miles per hour are causing very low humidity and dry vegetation, are fueling dangerous fire conditions. And lastly, to wrap up our weather, it is also tornado season. Could potentially see some tornadic activity here through Tornado Alley as temperatures are warming up and we're seeing some storms move through this weekend. So be on high alert in case we do see anything come here in Tornado Alley, Michelle.
Well, today our first news story is last Thursday, President Donald Trump postponed tariffs on Mexican and Canadian imports under the U.S.-Mexico-Canada agreement until April 2nd, citing the need to protect American farmers. However, the possibility of imposing tariffs remains. In the same move, President Trump lowered the tariff rate for Canadian potash imports, while a 10% tariff on Canadian energy exports stays in place. According to a White House official, about 38% of U.S. imports from Canada and roughly half from Mexico qualify for USMCA tariff exemptions. Meanwhile, China retaliated against the tariffs with a 15% duty on key American agricultural products, including chicken, pork, soybeans, and beef. U.S. farm exports to China, which peaked at $38 billion in 2022, fell to $25 billion last year, with January exports down 56% year over year. Additionally, the U.S. imposed a 10% tariff on nearly all Chinese imports in early February, increasing it to 20% last week to pressure China to curb fentanyl trafficking. Beijing responded with tariffs targeting U.S. agricultural machinery, particularly sugarcane harvesters, which saw 37% of their U.S. production exported to China in 2023. These trade measures also impact American farmers' planting decisions. Initially expected to shift toward planting more corn due to tighter supplies, many may now favor soybeans as tariffs raise input costs like fertilizer. Bloomberg reports that the corn to soybean price ratio has risen to 2.2, up from 2.04 in February. If the ratio surpasses 2.5, farmers typically prefer soybeans over corn. An Iowa farmer told Bloomberg he is reconsidering planting more corn given the economic shifts caused by tariffs on or potential additional tariffs to Canada, Mexico, and China. So this news, it continues to evolve and change these past few weeks, so we'll continue to watch it.
And it's certainly impacting the commodity markets, which we'll touch on here in just a little while. But new data from the Association of Equipment Manufacturers says U.S. sales of ag tractors and combines continue to decline in February of 2025, in contrast to last year. U.S. sales of agricultural tractors declined about 17.5% in February, while U.S. sales of combines fell by 48%. Kurt Blades with AEM says, quote, while the recent decline in agricultural tractor and combine sales reflects current market challenges, including global trade concerns, tariffs, the association continues to remain optimistic about the long-term future of agriculture equipment. Four-wheel drive tractors took the biggest drop, falling 41% last month compared to February of 2024. And meanwhile, in Canada, four-wheel drive tractor sales rose 237% compared to February of last year, while self-propelled combines dropped 32% during the same time. Blade also says the association is confident that through innovation and collaboration, equipment manufacturers can navigate some of these upcoming challenges. Michelle, before we get to our next story, I want to throw one other quick headline in there. Was checking out Twitter last night, or X last night, and saw that the National Pork Board announced a new tagline for a new pork campaign. For multiple decades now, we've seen the tagline, pork, the other white meat. So it's been a little while since the pork industry has introduced a new tagline to be connecting with consumers, and they just announced at their industry forum on March 13th the new campaign of Taste What Pork Can Do, which they say is really aimed at connecting with consumers. Producers already know the benefits of pork and the taste of pork, and so they said this new campaign tagline is really geared toward consumers. So it'll be interesting to see how that new campaign rolls out here for the pork industry.
And all where you can find that logo and slogan too. It'll be fun to continue to watch it. Well, Congress is quickly approaching a deadline to pass a continuing resolution to keep the government open. Today, Friday, March 14th, is the deadline to get a government funding bill passed through Congress and to President Trump's desk to avoid a government shutdown. We're recording this Friday morning, so we'll continue to watch it and update you on next week's show. The House voted Tuesday to pass a 6-month funding bill that would prevent a government shutdown at the end of the week with a 217 to 213 vote. The measure is now awaiting the Senate's vote, which some members have noted they will pass it to avoid a shutdown, and some have noted they will not pass it. We will wait to see what the news comes out of it, but we do want to add Emily Buckman, Director of Government Affairs for the American Farm Bureau Federation, says the duration of a possible spending package is a big difference between Republicans and Democrats. Buckman also answers the question, what happens to farmers and ranchers if they don't pass a spending bill by the deadline, stating farmers will not be able to take out loans, including mortgage loans, crop loans, which helps them pay for expenses to grow next year's crops. A shutdown would impact disaster programs, she says, and it would halt new signups for several conservation programs. Again, a government shutdown is not beneficial to anyone, she says. So we'll continue to watch this piece of news, especially as it folds today and throughout next week.
Well, South Dakota's Governor Larry Roden signed a bill prohibiting the use of eminent domain for carbon dioxide pipelines. This is a big move here, creating some uncertainty for Summit Carbon Solutions' plan to build a 2,500-mile pipeline through Iowa, Nebraska, Minnesota, and the Dakotas. The project aims to transport, of course, liquefied carbon dioxide from 57 different ethanol plants sequestering carbon dioxide to that site in North Dakota, potentially lowering carbon intensity scores and qualifying participants for federal and state incentives, including a $85 per ton federal tax credit. But despite the bill's concerns, Roden says that House Bill 1052 does not kill the project altogether, as it still allows for those voluntary easements. However, American Carbon CEO Tom Bias criticized the move, calling it a missed opportunity for South Dakota to benefit from the growing low-carbon biofuels market, including sustainable aviation fuel. He warned that while other states move forward, South Dakota now risks falling behind. It remains unclear how Summit Carbon will proceed in South Dakota, which serves as a key link between the sequestration site and 31 Iowa ethanol plants that may connect to the pipeline. 13 of those plants are operated by Poet, a Sioux Falls-based company, and, of course, one of the world's largest biofuel producers, with 5 additional Poet-owned facilities also slated to join Summit Carbon's South Dakota route. So I'm sure a lot of growers are feeling happy after that announcement. I know it's been a very mixed and contentious issue, Michelle, for those who are in favor of it and those who certainly are not.
As we look at some of those states by the Dakotas, we were in Colorado, like mentioned, at Commodity Classic. Delaney, you asked me this. What was one thing that you saw at this year's Commodity Classic?
One thing I saw, Michelle, just was people. I mentioned it on some social clips, but I love seeing the people. You know, it's once a year. You might only see some of these folks at Commodity Classic. I know that's not necessarily what everyone's going for. There's lots of new equipment, product, service announcements, and I'm sure you're going to share one of those with us here next.
Yeah. And to add, last week we had shared some unofficial numbers suggesting attendance at this year's event was on par with 2024. Now we're excited to share that the event actually set a new record with 11,395 total attendance, with 5,221 of them being farmers. While at the event, I had the chance to visit with one of the Farmer Business Network's distribution facilities. Before the tour, I spoke with founder Charles Barron, who shared how the site has expanded year after year. He compared it to Amazon, where farmers can easily check estimated shipping dates and prices. Now let's take a closer look inside this facility. I'm here with Jack Cox with FBN. First, Jack, tell me a little bit about your connection to FBN.
Yeah, so I've been at FBN for almost 5 years now. I was brought on at the time. The leadership here said, "Hey, we want to build a network that can deliver next day ag inputs across all of North America. Can you do that in a year?" And I said, "I'd give it a shot." And so I've been here 5 years building that out. Serving farmers has been fantastic. Mission-based companies, I've been fortunate to be part of a couple of them. When you have everybody really in pursuit of that singular goal, it just makes everything so much easier. And that's one of the things I just have loved about being here.
Yeah. So when you look at your role with the distribution side, what does that look like?
Yeah, so we are a direct-to-farm model, right? So I take over when the inventory comes into our network. So our supply chain team will go out and they'll manufacture it, they'll buy it, it'll come into our network. I have to decide where do I put it to meet the needs of all of our customers across North America, and put it into these warehouses, hire the people that do it, the transportation. We have our own drivers that make delivery on farm, so we have folks that manage them. We have transportation planners that say, we have to deliver, 1 million liters on farm tomorrow. How do I do that effectively? So all of that kind of falls into my area. In the last couple of years, we've also brought on the customer experience team, which involves our customer support team and that voice of the customer internally to say, hey, how are we doing and how can I help?
Mm-hmm. Now, we're at your facility in Colorado. Tell me a little bit about it.
Yeah, so this facility here in Brighton is what we call a primary fulfillment center. It's one of 4 across North America, and these are our hubs. These are the mothership for our network. This is where we bring in all of our network that comes in from wherever it comes in. We store it here, and then we either deliver from here when we can, or we will distribute it out to our smaller buildings around the country that we call logistics centers for local delivery. So we're able to leverage the hub and spoke model in logistics speak to really efficiently move product where it needs to be, when it needs to be there. And Brighton is a prime example of one of those sites.
And what's really cool is it's kind of like Amazon, where on the website you click it and you can see the estimated shipping date.
Yep, and we shamelessly stole their name, Promise, for what you get. But if you're a customer and you go online, we know where you are. Either because you've logged in and we have it as part of your account, or we'll use the IP address and say this is your location. And when you say, I want Toda glyphosate or whatever it is you might want, we know every bit of inventory in our network in real time, and it will say, okay, well, I know where you are. I know where the inventory is. I know how long the network takes to get it to you. I can get it to you tomorrow. I can get it to you in 2 days, whatever it is. We call that promise. Everything we do on the operational side of the business is geared towards making that happen. It's one of our central metrics because that is the important piece in e-commerce, is that reliability. We can't say we'll be there tomorrow and show up in 4 days, right? We have to do what we say, and we take that very seriously.
It's kind of like a product. If I wanted to order something online, I know it, but this is in the farming space, and it's not really common, if at all. This is the only thing where it's happening.
Yeah. I mean, and it's the only place where it's happening with that degree of execution around promise and that idea of timing, right? And like I said, I have a background in e-commerce logistics, and it is so important for people to have the trust in us for that model. And it's hard to build. I think I saw somebody a few years ago when they were hearing about what we did, and we started to launch our fleet, and they said, oh, they're going to just solve it by getting trucks. It's a bit more complicated than that, right? But it shouldn't feel that way to the customer, and that's central to what we're building, and I don't think anybody else is doing that.
Now, talk to me about the season we're in here right now as we head into spring.
Yeah, so we're in the pre-season, pre-plant part of the season. We call it our big ship period. Our customers, many of them order during November in our cyber event, where we offer pretty amazing discounts. It's the cheapest price they're likely going to see all year. We offer financing deals through our financing arm, operating lines, loans, whatever the farmer needs. So they order in November, and so we have this huge bundle of orders that farmers are going to want before they plant, and so and a very short time to deliver it in. So we started in the South in our building in outside of Memphis about a month and a half ago, and we've been delivering down there, and we're slowly moving north. So this week here in Brighton is our first kind of big week where we're starting to deliver in this area because in anticipation of the farmers' needs for the next few weeks. At the same time, we're going to have farmers who are going to order now. Maybe they've been waiting. It's been a tough year for farmers, and maybe they've had to wait and see, or they've been wanting to resolve some of their financial issues. So they're going to order now. So now we also have the capacity to squeeze that in and put those on those trucks that are going out. It's a huge lift. We're going to be delivering in another few weeks as we continue to move north, and we're still delivering in this part of the country. We're going to be shipping 2.5 million pounds of freight on farm every single day across North America. It's a massive amount of freight to move, but we want for farmers to be predictable, reliable. We say we're going to show up on this date. We show up on that date, and we're pretty good at doing that.
Yeah. Wow. A lot to know. Is there anything else that farmers should know as we look at the behind the scenes it takes to get it to here, to get to their farm?
Yeah. I mean, I think the big thing is we're going to have what you need. When you see that on the website, it's because we have it. When we say we can get it to you tomorrow, it's because we can get it to you tomorrow. It's not a guess. It's not a hope. It is based on what we've built. And so, I encourage farmers to give us a try, right? I think that's always the big thing on e-commerce. Going back to Amazon selling books 25 years ago, to Wayfair selling furniture 10 years ago. At first, just try it, right? And go on the website, see what we have. See if the price works for you, see if the delivery timing works for you, and wait for that FBN truck to show up, and I think you're probably going to be surprised.
A lot of data points you're using.
Yeah.
Well, thank you so much for joining.
Yeah, thank you.
Well, what a unique experience, Michelle, for you to get to tour that facility and bring our listeners along with you. We'll get to more commodity classic news here in just a little while, but I wanted to update our listeners on a rapidly reproducing tick that's raising some concerns for cattle producers in several states. The Asian longhorn tick, recently discovered in Illinois, Missouri, Arkansas, and Oklahoma, poses a serious threat to our cattle herds, especially considering the serious liquidation we've seen here over the last few years. Teresa Steckler, a beef cattle educator with the University of Illinois Extension, says this tick is parthenogenic, meaning it can reproduce without a male. That allows a single tick to multiply into the thousands in a very short period of time. The ticks are tiny, about the size of a poppy seed, but in large numbers, they can form noticeable clusters, often around the udder, brisket, ears, or skin folds. If producers spot these ticks on their cattle, Steckler advises contacting the local extension service immediately and isolating those affected animals to prevent further spread. So I'm sure this is a news story we'll continue to keep an eye on, as well as we certainly can't afford to lose more cattle in the U.S. herd.
And like we've seen in the ag equipment world, the downturn in the ag economy is hitting another manufacturer. CNH is reducing its workforce at its Fargo, North Dakota plant. In a statement to Brownfield's Ag News, CNH cited current and anticipated market conditions as the reason for the cuts. The company notified employees last week with about 198 hourly positions affected. CNH says it is committed to supporting workers through the transition. The Fargo plant, which produces tractors and loaders for the agriculture and construction industries, isn't the only site facing cuts. Next month, CNH will also lay off 175 workers at its Benson, Minnesota facility.
Well, to end our news for today, throwing in a little bit of a fun legal twist, as well as something we probably all use, emojis. They may seem harmless, but in some cases, they could start to carry real legal weight when it comes to contracts. Roger McOwen, an agriculture law professor at Washburn University, explains that a contract is formed through an offer and acceptance can be shown in any way that objectively indicates intent, now including emojis. He points to cases where a grain buyer texted a contract to a farmer who replied with a thumbs up emoji, leading to the court ruling that an enforceable contract had been made. Other cases have seen instant messages modify contracts despite no oral modification clauses, and even a full moon emoji in a tweet raising security concerns. McOwen's advice: be mindful of digital communications, and when in doubt, stick to clear traditional contract language. So don't be sending thumbs up emojis, Michelle, unless you are ready to move forward on whatever is being agreed upon.
Communication is big in any industry you play a role, so really important piece of news there. But like mentioned, we've had a lot of great conversations at this year's Commodity Classic. This week's featured interview is Here with Terrain, a resource from farm credit associations that provides insights on economic factors, trends, and agricultural markets for U.S. farmers and ranchers. To dive into the latest market outlook and industry trends, let's hear that conversation from Tanner Winteroff and Matt Clark.
Hey folks, here at the Ag Explorer booth, we got a nice conversation here, learn a little bit about a new friend of mine as well as terrain. So my pleasure to introduce to you Matt Clark. Welcome to the podcast.
Oh, thanks for having me, Tanner.
Have you had a busy morning?
It's been a busy morning. That's a good thing.
Tell me what you do and then tell me about terrain.
So I'm a rural economic analyst for Terrain. Terrain is, I would call it a think tank for some of our farm credits. So several farm credits came together and asked, well, what can we offer to farmers to help them grow in the long run? Not necessarily tomorrow or a week from now, but how do we think about 5, 10, 30 years down the road? And so Terrain's got about 8 analysts that cover all the different commodities, everything from walnuts to wheat, corn to Cabernet. We got it.
Holy cow. You do cover everything.
We do. We've got analysts in California, and then we have quite a few here in the Midwest, such as myself, covering your primary crops.
So you got a big team.
We got a big team.
How long have you been in that role?
I have been in farm credit a little more than 7 years, about 7.5 years.
Okay.
And so when Terrain formed, I kind of sponged into Terrain I was doing a similar role then.
Yeah.
And Terrain has been, I think, about 2.5 years, almost 3 years maybe.
Okay. So as you look forward, obviously there's always challenges that farmers and agriculture are facing, and maybe some of those challenges are elevated in our current standpoint. What are you seeing?
Yeah, so the report that we've got out there right now is called The Big Shrink, and it's highlighting kind of what you're pointing out. We've got some of these immediate problems or immediate issues. Obviously, you're like me, you're following the markets. There's a lot of red, to say it lightly.
Yep.
There's a lot of tension. And one of the things that we try to do is say that is now, and we realize that struggle. So how do we position ourselves so that we're successful 5 years from now? Some of that is most definitely talking markets today, talking all of your products today. Some of it is talking about subjects like the Big Shrink, where we say, okay, since the dawn of time, human population has been increasing. If you look at the data, 2065 may be the end of that. That may be peak population for us, which I know that sounds a long ways away, but if you were to...
It does. It really does.
If you were to do a 30-year farm loan today...
Oh, when you put it into that perspective.
That's bucking that time period, right?
Yep.
And I think if you were to you and I's lifetime, I imagine we're about the similar age. The story has always been feeding the world. And I think the American farmer should be proud of what they've done.
Absolutely.
Undoubtedly. And it's undoubtedly been good for ag. But as we head into a period of slower global growth and eventually peak global population, that conversation looks very differently. So how do we think about that today so we can set ourselves up for success 5, 10, 30 years down the road?
So this group is really putting an emphasis on paying attention to the economic factors that are not just today, but could affect a farmer for their entire career.
That's the goal of the group, because obviously we want our farm credit customers to be successful all the way through, and that next generation. Again, 2065 seems a long ways away, but if you're coming out of college now, hopefully you're still farming.
Correct.
In 2065. And making that generational transition, how do we think about it to set us up for success?
Exactly. So if we're looking even closer, 2065 is a long ways away. Well, what do our listeners have to pay attention to in the next 12 to 18 months?
Yeah, and I think you've heard obviously we've heard trade conversation now, sure. If you look at the data, it makes sense, because there's some commodities that are highly concentrated risk with very few countries, right? So you think about sorghum, obviously a lot of that has gone to China.
Right.
Okay, very highly concentrated. And I walked through that in that report, which you can find on trainag.com. The issue is China specifically is a little bit emblematic of some of our other top trading parts. You think about China, peak population growth already. Japan, already peak population growth. South Korea, already peak population growth. That's 3 of our top 5.
Mm-hmm.
So as you hear about some of the changes in landscape about exports, about, hey, we need to do some more missions to places that are high growth but maybe high risk, like in India or in Africa, where we export very little, you're going to hear those conversations, not because it's necessarily politically, but because there's this demographic thing that is going on that in the next 12 to 18 months, I think you're going to hear a lot more about it. You're going to hear a lot more about how do we export high-value goods. I think that will be a focus that even in, you're from Iowa, I'm from Kansas, even in that Central Valley or central area of the world, we probably don't think about as much, but I do think it's the conversation that's going to start matriculating soon and will push us forward.
Well, there's a lot of booths here that are looking to add value to the commodity crops, and it's neat to see, them go from startup to feasibility to something that could officially impact the farmer's pocketbook.
Sure, you think about 30 years ago, I mean, we weren't talking about ethanol, where we were calling it gasoline, right?
Yep.
And it was a small percentage. You go back to 1990, we exported about 80% of the value of corn exports was in bulk, very small percent in other processed goods.
Yep.
Today, it's about 60% goes in bulk, 40% and a growing percent is those high value things. It's the syrups, it's the ethanols, it's the oils. I think that's probably the future of a lot of our commodity exports.
That does make a lot of sense. What about, you've stated you're with the Farm Credit System. This is information that they're able to use. What are we thinking about interest rates?
Yeah, so full disclosure, used to work for the Federal Reserve, loved it. It was a great time. I would say this. If you just do a year-over-year comparison, some of those short-term rates, so if you're on a variable rate or something of that nature, the Federal Reserve has decreased the prime rate or the Federal Reserve's fund rate about 1% compared to last year. So that is going to be likely lower. Now we're in a really interesting situation where you have inflation has been sticky. Friday we got a really good report, but it's still been stickier than we would like. It's above that 2% target for the Fed. You've got unemployment that's low but probably trending higher. And you've got growth that's good but is still a little bit slower than maybe we'd like to see. So if you're the Federal Reserve, I think in the short run they probably play it safe and kind of just wait to see how things play out. I don't see a whole lot of cuts. But I do think as you go out through the year, you could probably see another 1 or 2 cuts in the year, which on your variable rate would help you. The question for me is the longer rates.
Correct.
That's the big piece. Obviously, the 10-year Treasury went much higher over the last 2 weeks based on maybe some hope of some inflation, let's say sluggishness or coming down a little bit.
Yep.
Maybe a little slower economic growth. We've seen the 10-year come down quite a bit. That could help you. Again, it's still going to be higher than what we've experienced, certainly from 2008 all the way up till 22. It's still going to be higher than that.
I know we've got a significant pool of our listeners that are hoping rates go down, long-term rates. I think the phrase "marry the farm, date the rate" has been said over the last couple of years, with the hopes that there'd be an opportunity to refinance lower.
Yeah, I think that's a great phrase. First of all, I love it. I'm going to steal it at some point. I hope that's okay with you.
You bet.
I think now more than ever, having that relationship with your banker is super important because you got to know your options. And when you go in today, it's going to look different. Forever we got so used to that fixed 15-year rate, right? It was low, it was simple, and it was a set it, forget it, pay it, we're good. Today, to your point, we're dating those rates. And talking with your banker about, okay, well, what can I do that's maybe it's variable with an option to convert, or maybe it's only fixed for 2 years and we'll have a chance to look at it again, or maybe it's fully prepayable, which is kind of Farm Credit's big deal. How do we think through those things to position us so that if there's a chance, I can lower and reduce that expense a little bit?
Yep. And I do appreciate that perspective. And thinking about this report overall, you said you can get it at terrainag.com.
Yes, sir.
Is there anything else that if someone goes and looks at that, they're going to be surprised to see?
Yeah, so I think that's this topic, when I talk to it about farmers, most of them intuitively go, yeah, that makes sense. But then when you back out and start showing how much fertility rates have fallen amongst our top trade partners, and by 2050 you're looking at 80-90%, depending on the commodity, of our current export partners are already in decline. That's really when you start the gears rolling of, I understand why we're pushing for biodiesel.
Yep.
I understand why we're pushing for higher value export products. I understand why maybe now there's some tension here that there wasn't 10 years ago in terms of trade relations. And I think that will start to, solidify some of those thoughts that farmers have had for quite some time, and open up the conversation. What do we do with those marginal acres? How do we gain different revenue streams? How do we think about land as the commodity, not something that grows a commodity?
Yeah, I think that's a fantastic perspective. I'm excited to go look at the report because that's something that I would geek out on, and the data and information is going to be extremely valuable. So remind our listeners again, where's the best place to find it?
Yeah, you can go to terrainag.com, or if you go to Farm Credit Services America or American Ag Credit websites, you can also follow the resources links to it there. It's going to come out in a series, so there's 2 now. Next Monday there'll be a third piece that I wrote, and then about every month or so we're going to keep delving into different areas, whether that's protein or whether it's tree nuts or whether it's biofuels. We're going to slowly roll out as we go.
That's cool. Well, Matt, I appreciate you taking the time to sit down with us and share this with our audience. I thank you very much.
Well, thank you, Tanner. I appreciate it.
Like mentioned, a lot of great conversations. But Delaney, what's happening in markets this week?
Well, of course, markets are also cautiously watching what's going on in the tariff situation playbook. But we did see positive export sales this week. In fact, we saw a 7-week high well above this same time last year. Top buyers for export sales were China, who purchased about 208 million metric tons. We also saw some unknown destinations switch to showing China in the books, which was an interesting focal point for the markets. We also saw top buyers coming from Indonesia, as well as new crop sales for soybeans and bean oil sales. This week, we also saw a fairly boring WASDE report that really didn't bring a lot of excitement for the markets. USDA left U.S. corn and soybean balance sheets unchanged, but did slightly adjust wheat balance sheets. We also saw this week the Argentina-based Rosario Grain Exchange cut corn production estimates by about 1.5 million metric tons and increase their soybean targets by 1 million metric tons. Brazil's CONAB also made small offsetting adjustments to the first and second corn crop targets, while they increased soybean production just under 1.5 million metric tons, as South American crops are probably going to be big this year, but not record like we've seen in some years past. And lastly, when we take a look here at the old and new crop markets, we saw on Thursday quite a bounce from corn and soybeans at the end of the day. May corn was up about 5 cents on the board. December corn finishing about 4 cents higher. Meanwhile, soybeans ended their session 10 cents higher in old crop, 5 cents higher in new crop. And the wheat complexes also finished the day quite a bit higher. Chicago and Minneapolis wheat finished 9 cents higher, while KC saw about 15 cents higher on the board. And as we take a look here on Friday morning at where markets are opening at, tending to be lower. So a little bit of a mixed bag there for markets, definitely playing that yo-yoing effect with what's going on in the headlines this week. But that's a quick look at where markets left us for the week, Michelle.
And this month is National Agriculture Month, and National Ag Day is coming up. Any special plans of how you're celebrating?
Well, we're going to have a very special guest on the podcast next week. I don't want to give too much away, but definitely a face and voice for agriculture who recently held a very prestigious role in the last administration. So we'll just leave it there. I'll let our listeners guess about who that person may be joining us next week. And I'm excited to see all of the different posts coming up on National Ag Day across social media. Michelle, what about you?
Yeah, I'm excited to see that as well. But I know a lot of states are having their legislation days or advocacy days. So that'll be fun to watch and see what comes out of those. But it's certainly a fun month to see everyone's connections to agriculture when they post it on social media.
Absolutely. And if you post a picture on National Ag Day, tag us. We'll reshare it. You can find us at Ag News Daily on every major social platform. We love to see how you're celebrating National Ag Day this week. But Michelle, with that, what do you say we let the people go?
Let's let them go.